Today's guest is Scott Chamberlain. Scott Chamberlain is no stranger to starting a business and thriving in business. He is going to talk to us a little bit about reverse mortgages. If you're anything like me, I'm probably your most typical millennial, and I've just recently bought my first home. So anything mortgage related is kind of a foreign language. Scott Chamberlain is near and dear to my heart. He is not only my father-in-law, but he was a huge inspiration to me to start my own business, to take that leap of faith that you have to take when you start your own thing. Scott Chamberlain with New American Funding has been doing mortgages almost as long as I've been alive. I can't wait for you to hear what reverse mortgage means, hear Scott Chamberlain kind of talk about the different kinds of mortgages, and just get a little educated. So join me in my conversation with Mr. Scotty Chamberlain. I just bought a house, as you know. I went the most traditional way I think a new home buyer could go, with an FHA loan. I know that you have a long history of FHA, conventional, all the loans, because that was almost your entire working life was specializing in mortgages. So now you have a new kind of mortgage.
Mhm,
And even when you say you've explained it to me, but I still feel like it goes.
mhm.
So in layman's terms, like I'm an elementary school student, what is a reverse mortgage and how does it differ from what people generally know as a traditional mortgage?
Yeah. Well, to start with, the reverse mortgages for seniors, people over the age of 62.
Okay.
And and generally most people that are looking at reverse mortgages are retirees, and they are concerned about their debt situation. A
Okay.
lot of times they still have a lot of debt.
Yeah.
They're becoming to a point where they're ready to retire, but they can't
Hmm.
because they have all this outstanding debt. So the people who bought homes in their 30s and 40s usually have their homes paid off, or
Oh,
they have a lot of equity there.
sure.
In fact, the equity in the senior's home has more about their assets than anything else that they own.
Mhm.
Some people have been fortunate and saved money; others people have not, depending on life's terms.
Situation.
Yeah,
Hmm.
and so the reverse mortgage gives them a vehicle to be able to access some of that equity.
Okay.
Um, it's no different than a traditional loan in the fact that um, you're borrowing money and you're pledging your house as collateral, same as you would on a FHA or conventional or
Sure.
whatever. The difference is how you pay it back. In a traditional loan, you may set it up on a 15-year term or
Hmm.
30-year term or whatever, and you're required to make a payment every month for that period of time.
Yeah.
If you miss payments, you're in default and you could be
Yeah.
foreclosed on. With the reverse mortgage, there's no payment required. So if you want to make a payment, you can. If you don't, they simply add the interest for that month because you're still being charged interest. They add it to your unpaid balance. So your balance will go up that month. And if you don't make a payment the next month, it'll go up again by the amount of the interest. So instead of amortizing a mortgage so it pays down to zero,
Hmm.
that's the verb of reverse. The balance is going up over the years instead of going down. But the feature is you don't have to make payments. And the loan is settled whenever you sell the house in the future, or if you live in the house for the rest of your life and you decease, that's when the settlement takes place. Now, there's a lot of misconceptions. People say, well, you're giving your house away
Hmm.
to the lender, and that's not true. the children or the heirs of the property,
Mm-hmm.
they have the ability to sell the property, pay off whatever the balance is, and the remainder of that cash asset, would be split with
Okay.
them. So if they want to keep the house, then they would need to refinance it because the loan is made only to the senior. It's not an assumable mortgage.
Okay.
And but there was the concept, people thought that whenever you died, the lender took over your house and you didn't pay.
Right.
But that's a lot of changes have taken place on that. So when someone comes to me to inquire about a reverse mortgage, I question them, why do you want a mortgage?
Mm-hmm.
What are you looking to do? Some people need a stream of income. Once we determine the amount that they qualify for, they could get a check every month for the rest of their life
Mm-hmm.
for whatever that number would be. Or they could set up a line of credit and they can draw from that line of credit whenever they need the money. Okay. If they don't use the money in that line of credit, it grows each year, and it grows at 0.5% higher than their interest rate.
Okay.
So from a long-term standpoint, if you had money in your line of credit, it doubles about every 10 years. So it's a great tool if you don't need the money, or you can draw some out to do improvements or whatever, but you still have extra money
Mm-hmm.
to let it sit in that account. And in 20 years, when you're a lot older, someone's 62, maybe now 82, that account's grown considerably.
Sure.
And where it really benefits a husband and wife, usually the husband is the one who goes first, generally that's how it happens.
Yeah.
And when he goes, part of the income goes away because maybe both parties are drawing Social Security.
Mm-hmm.
But when one dies, then they get the check for the highest of the two. But the other check goes away. So now instead of having two checks, you only have one check.
The one income. Mm-hmm.
And so, but you still have the same bills. And so by being able to have that line of credit that has grown, whenever you need to put a heat and air system in because it went out, or you got a refrigerator goes out, life happens.
Yeah.
They have that money available to draw. So it's kind of a long-term care policy.
Yeah.
For not just for long-term care, but for anything that comes up, any kind of emergency.
Okay. So let's go back a minute. This is not a new mortgage, a new concept. You mentioned that the rules have changed. So take me back to when you started doing mortgages, when you were young Scotty, way back when in Georgia. And did you start in Georgia?
I did.
Okay. We started in Georgia. Were they around then? Why didn't you specialize in them then?
Well, a couple of things. First of all, the reverse mortgage started in 1989.
Okay.
Ronald Reagan signed it into law in 1989 for the Department of Housing and Urban Development. And specifically, the reason they developed the reverse mortgage was because of the growth of the real estate in California. You had people living, let's say, in the Hollywood area that had bought a house when they were young and it paid off. But the taxes and the insurance was becoming so expensive because the value of the home was going crazy.
Okay.
So people had lived there. They had to sell their house because they couldn't afford the taxes and insurance.
Oh, wow. Okay.
And so by letting them access part of that equity, they could pay their taxes and insurance, and they didn't have to move, so they could live there for the rest of their life. So that was the thought behind the program. And over the years, it's changed. A lot of things have changed as far as the spouse benefits of the program. When you have a husband and a wife, now it's set up that if either one dies, the other person lives in it for the rest of their life also. So it covers both of them. And it used to not be that way. the line of credit wasn't available at one time also. So there's been changes along the way in how the house being sold. Before they had to do something immediately. Now they've got time to work with it with the lenders. So there's been some improvements with it. But going back to me, you know, in the 80s when I started doing mortgages, I was doing mostly FHA and conventional mortgage. Had no very little experience. I've never heard of a reverse mortgage.
Okay.
Up until in the 90s. And I forget the reason that I ran across it. I was reading in HUD one day and I saw this program because nobody was doing it in Georgia. And I've always done things a little different in mortgages than anybody else.
Okay.
Everybody's chasing real estate agents over here. I'm talking to bankers or whatever for referrals. So I've always done things a little different. But when I found the program, I started doing that. That was in the late 90s. And I did it for around 9 years. And then I got sidetracked. I opened a different business, as you may know. And I got out of the mortgage business for a number of years.
Yeah.
And then after I sold my previous business, my transportation business, I retired in Tennessee and I flunked retirement. And I had to do something.
Can't do it.
I was too
You're not good at it.
antsy and I couldn't do it.
No.
So I got back into the reverse.
Yeah.
And now, because of my age, I'm a senior too.
No.
And so I can relate to the people more.
Hey there, my little biz besties. It's Ashley Chamberlain, host of In Good Company and CEO of Chamberlain and Good Company, the virtual accounting firm that actually speaks human. If you're a business owner and you've ever found yourself staring at QuickBooks like it's a literal foreign language, wondering if your miscellaneous category is secretly plotting against you, this is for you. We just launched something new, a private Facebook group called Mind Your Business and Your Books. It's for business owners who want real answers, real support, maybe a little less panic when it comes to your books. We're talking QuickBooks help, tax tips, mindset shifts, because yes, money is mental, and a community that actually gets it. How rare, right? It's $30 for your first month because we believe in starting strong without breaking the bank. That's not what we're trying to do here. After that, the price goes up. We'll go live twice a month. We'll answer your questions that are submitted by you ahead of time. Search Mind Your Business and Your Books on Facebook, or just check the link in the show notes. Join us. Your spreadsheets and your sanity will thank you.
There's a commonality in your transportation business that I do know very well, where we met, where I got my feet wet really with the trades and all that with accounting. But the commonality I notice is Caring Man was serving seniors, essentially. And what you're doing now is still doing that. So either you've been a senior for a very long time, or there's a passion of really providing service to seniors, and whether it's finding money for them in a way to help them, you know, kind of live out their best life, or taking them to doctor's appointments, taking them to parties. That's what, you know, Caring Man. Really, anywhere they wanted to go, you found a way for them to go, whether it made myself or the other Chamberlain boys like, what is he doing? You're still finding a way to serve seniors. Do you feel like this reverse mortgage is a way to really give back?
Yeah. And the neat thing about it, the mortgage business that I had before, I had 100 people working for me. And you're more managing people and you're managing the growth of the business and less is involved with the people.
Sure.
Now I'm dealing one-on-one with customers. And, you know, there's so many scams out there for people and warranties and all types of things.
Yes.
And, you know, like any business, you can deceive people if you want to. But I feel like that customers, when they come to me, they understand what they're getting because I spend time with them.
Yep.
I have customers who call me from 2 years ago when I talked to them. The impression was made that I knew what I was talking about. And when they finally decided they wanted to do it, they knew who they wanted to talk to. And so that's a fulfilling thing for me as much as it is for them, because I know that I've done a good job for them and explaining how the program works, because it works in a lot of different ways for different people. So my whole goal is, when I meet with the customer, is to find out what their needs are. And in fact, I've talked to people and told them that they did not need to do the reverse mortgage. And they look at people like I'm crazy. But if you're in a house that's been in the family for 200 years, it's a farmhouse, and y'all meet there every Thanksgiving, and you ask them, what are you going to do if you die? Well, I want my children. Well, they're going to have to get a mortgage to do that. And not only, it's not good to get any kind of mortgage, whether it's reversed or not, because there's still a lien that's got to be paid, or they're going to lose the property rights to sell it.
Still has to be paid.
Yeah. So I've taught people out of mortgages before from that standpoint. So, like I say, it's an individual type thing as far as what we do, but I do get fulfillment from it. I feel like I'm with my knowledge. I've been in the business 40 years, so when they start talking to me about line of credits or a conventional loan or what, I can talk about the benefits and the features of both programs.
Right.
And so
That
if
experience.
they want an FHA, or they need to pull out more cash or something, then I can direct them in that area and what to look for. So it gives me that, having that other experience is giving me the ability to talk to them about whatever their needs are.
Right. You can kind of give them a pro and con list, and I love that. And for you, you are through New American Funding.
Yes.
So how do people find you?
Well, New American Funding is a large company out of California.
Okay.
Most of what they do is traditional FHA conventional. Several years ago, they recognized the market because this older generation, more assets are in the older generation now, and they're doing as many loans as the conventional people now. So they started putting their foot in the water, on reverse. And they've grown quite a bit doing that. And they go around and hire people that have experience, not just somebody to do reverse, but experienced people that can work with the single. So, but the people that come to me usually come to me through referrals of customers I've dealt with in the past. In those branches that we have that do conventional loans and stuff, they have people that come to them that they see as a good match for the reverse mortgage. So they refer, we don't have a lot of people, like 2 people in Tennessee. I'm the only one in Kentucky, and I'm also licensed in Georgia and Florida, so I do business in all those. But so those branches send us business. We have a number of different sites that people can go to when they inquire about a reverse, and then they pass those customers to us. And then we just take it and, run from there and explain the program and everything. So everybody sees Tom Selleck on TV, and they get stirred up, and then they start checking around with different companies. And,
they want to know what's going on.
Once they end up with me, though, it's all over with. They don't go anywhere else.
That's one stop. We're done. So we're getting leads from online. Is if someone maybe has a parent that is over 62, that maybe is in the same boat of what you just described, where could they go to chat with you about it? What would that look like?
I have a website, that the company assigns to us, but New American Funding, they have a website that you can go to and basically put some information in there, and it'll tell them how much they qualify. And then they would connect them to someone in the area where they live. So If someone lived in Oregon, for example, I can't do that loan
Oh.
because you have to be licensed in the states that you're in. So going to that main site, you're going to end up with someone who is
Who
licensed
can be in that area?
in that area.
Okay.
Yeah. But those are the children that you're talking about. They're the ones that really need to look into this because a lot of the parents don't understand, and so much fraud's going on. They don't.
Yeah.
The children can recognize either they're going to have to help pay money
Yeah.
if there's medical issues coming into it or problems, and this it gives them the ability to
Help.
utilize their own parents'
Yeah.
assets
Yeah.
instead of them having to come out of pocket, and can help the parents stay in their home longer
Okay.
by having those assets. They can have people come in and stay with them and cook for them and things like that if they're not in the same location, where they live. So
Yeah, which is so important because
Yeah.
it's so scary as the kid sometimes to think, how am I going to take care of my parent when they're not ready to just go off somewhere?
the biggest concern seniors have, and me being a senior, I'm going to acknowledge that. The biggest issue that they have is how long will my money last?
Yeah.
Even if people saved up, they got $1 million in the bank or whatever, and if they're using that money, depends on how long they live, people are
Yeah.
living longer now. And so,
Very uncertain.
yes, the biggest concern that seniors have is, am I going to have enough, when I
keep
finally get
living.
out of here?
Yeah.
And everybody wants to leave something behind to their children as well. So they're protective of what they spend and that
Yeah.
type of thing. So it just gives them an avenue to help them live more comfortably.
Mm.
And,
A little more peace of
and
mind.
seriously, I've had people that eating peanut butter and jelly sandwiches that come to us. And you just have they pay their taxes and insurance, and they just
Yeah.
don't have the assets. But a lot of times I'm coaching people as well
Yeah.
for the county they live in. Have you contacted them to see can we get by with not paying taxes on
Right.
the real estate? Because there are benefits in some areas if you're a certain age and
Mm.
income.
Some kind of guidance.
So I give them ideas like that too
Yeah.
to help them along, especially people living that close. So
Yeah. I love that.
Yeah.
newamericanfunding.com. You can put your step in,
that's all.
see if you qualify, depending on where you are. Hopefully, you're in this area.
Mhm.
You'll speak to Scott Chamberlain, who did show up with cool socks. I was
I
giving,
got my Easter socks on.
I do love them. They're very festive. I was giving the other guy a hard time because his were very boring. And I think I'm kind of, spoiled. It's a good socks. So the man with the good socks, knowledgeable for years and years about all different kinds of mortgages.
I appreciate you taking time to talk to me today.
Yeah. Thanks for stopping by.
If I could do it all over again, there'd be no wish I would, should have been. Spend more time with my family and friends. If I could do it all over again, I'd wake up early and start